NVIDIA just shy of a $4 trillion market cap. Shares need to hit $163.93 for the chipmaker to become the first ever company to reach that milestone. Joining us now, Vivek Arya, Bank of America senior semiconductor analyst. Vivek, great to have you with us. Do you have any concerns about this? I mean, I think that one argument that a bear might make is that a lot of its customers are actually working on their own chips, some closer than others. But for instance, Amazon is pretty close up there in terms of shipping that chip out. Is that a threat to NVIDIA, or do they work in conjunction with?
Sure. Good morning, Melissa. So I think market cap is going to follow the size of the opportunity and the company's ability to monetize that opportunity. And there are two ways that one can look at this. So first is, if you look at the consumer electronics market, Apple is about a quarter of that market. It's about $1 trillion market, and Apple has this $3 trillion market cap. NVIDIA's AI market can be over $1 trillion to $2 trillion, and it has 80% of that market. So that's one way of looking at market cap. Second is, if you look at 2026 and just consensus estimates, NVIDIA's net income in absolute dollars will be 20% higher than Microsoft's net income and 40 to 45% higher than Apple or Amazon's net income. So that's another way to look at that. Even at the same price to earnings multiple, you can consider a higher market cap. In terms of competition, I think custom chips have been about 10 or 15% of the total market. I don't see that changing over time. Amazon is investing, Google has been investing for a number of years. And the challenge these custom chips face is that the requirements of generative AI models are changing so rapidly that it is very hard to keep up, because you really need that combination of silicon and software and developers to all march to the same beat. And that's really hard to do with a custom chip. So we think they are 10, 15% of the market, but it's very hard to dislodge NVIDIA's dominant 80+% market share.
Are there more DeepSeek moments to come, Vivek? We've got like 30 seconds, but with DeepSeek, you can do a lot with a lot less.
Sure. And, interesting thing is that DeepSeek is not even among the top 20 or 50 downloaded applications right now. I think what DeepSeek showed was not just that there are certain kinds of models you can do in a cheaper way, but there's a new class of reasoning models that generate tremendously more computing demand. And that's what I think the consensus has probably missed. So we think it has actually been a net positive for the company.
Actually, before you start, Jim, we got the NVIDIA record market cap.
Oh, there you go.
Yeah.
All right. Hey, who is the leader of nicest guy on earth? Jensen Huang. I mean, Jensen Huang comes in peace. I remember when he didn't like Zuckerberg because he felt it was about combat. And then Zuckerberg pivots. I mean, people have to understand that Jensen Huang, when you meet Jensen, you think he's just a guy who is a gamer and has no concept of how wealthy he is. I mean, I'm telling you, these guys, I know that there's a tenor, especially in New York City, about rich people and how they conduct themselves. This man's made more millionaires than anyone in America, and he just is so grateful that people made money with NVIDIA. And I just feel like I got to say this stuff. He is not the beneficiary. It's everybody he's brought along.
Well, we talk a lot about his background as an immigrant, Jim, as a man who cleaned toilets at Denny's. I mean, that legend is based on real stuff.
It's all stuff. And went to a school that was that his parents thought was a special school in Kentucky. It turned to be special in another way. And then he builds it up and he becomes friends with everybody and they beat him up and then ultimately he's like the leader. And I just want people to understand. I mean, I remember like I had dinner with him and I was with Lisa, my wife, and he said, "You sit over there." I'm sitting next to Lisa. And those things go so far. That just goes far. When you watch it, and he sits with your wife and not you. You don't just say, yes. "Oh, I wanted to be next to him." You say, "Boy, that guy gets it. That guy gets it." And again, the personal, can't have a good personal relationship with the man, but the real Jensen deserves everything. And people don't understand this man's changed the world, and it's not just AI. It's rapid computing, okay? You have the faster you are in accelerated computing, the more things you can do. Yeah. And this is the man that made it so that we're going to have robots that make our beds and clean our toilets instead of him. He did do that at Denny's. It's funny. I wish Denny's stock were doing better. I wish he would just go buy Denny's. Don't forget when CoreWeave was struggling with its deal. What did he do? He came in and said, "Listen, I'll buy as much CoreWeave as possible." Yes. Now, it was viewed as a charity mission. He bought it at 40. This man is so smart. Does he ever make you feel that you're dumb? No. He makes you feel that you're smart.
We'll keep our eye on NVIDIA into the close. You need 163.90, I think, to get to $4 trillion. We're just obviously less than $1 away.
It does feel like there's a, let's get it there momentum.
Right.
I don't like that.
Right.
I like it based on just new accelerated computing or something new involving Blackwell or Rubin, but it's just on
Which
momentum.
is why this CAD upgrade was so interesting out of Melius today. Outperform 500 on the engine business on the AI build-out.
Yeah, and that's Cummins, too. You can probably take Cummins and outperform. I do believe that if you're involved in the build-out, like we have a big position in the chop sauce for Eaton, you're making a lot of money because the build-out is nonstop. And GE Vernova is still the biggest, I think, because you have to have nat gas. We'd love to have it all based on wind, although not the president.
Right. The Melius upgraded CAD does point out that bubbles remain a worry when it comes to this build-out, but their general take is that it's so far out in the future that they're not too worried yet.
Well, I mean, what are you going to do when you put one of those up? Well, they like CAD. Hey, by the way, Jim Umpleby should get some credit there. It was Jim Umpleby, he's retired as CEO, but that was one of his initiatives. Look, I think that the build-out, you can't do what Amazon wants and Alphabet wants and of course what Musk wants, what Zuckerberg wants, without more data centers. It's just remember, Jensen Huang, it says it's an industrial revolution, and it would be like if you were doing steam engines and you said, you know what, we don't need as many steam engines, I predict. Wrong. It's not the canals. There was an overbuilding canals.
Right.
I just think that they're valuable. Look, when you speak to CoreWeave, when you speak to Michael Intrater, who's a terrific guy, he would say, look, we can't put them up fast enough, and they're valuable even after they do not have the latest and greatest. People don't understand that. This is not the 386 going to the 46, going to the Pentium. You can't throw these away. They work. There's always some use for even the oldest ones. So they pay themselves back. Well, you look at this 3.0. Come on, let's go.
I know. We're not that far away.
It's Jerry Lewis here with the telethon. What the hell? Honorable person, you got to change the discourse. Got to be like the old Trump. Light. There must be NVIDIA.
We're going to roll the animation as NVIDIA, a $4 trillion market cap, which no company's ever done, Jim.
Well, look, it's the evolution of hardware. It is. If it were just AI, generative AI, that'd be one thing. But it's accelerated computing, and people don't give that enough credit. And I think this time is not software time. It's not Exxon's time. It's the idea that we have leader of the world in hardware. Remember, there's a ton of software in NVIDIA, and there's nobody that's near them. Nobody's near them.
Can we take this moment to basically assert that the AI trade is going to drown out tariff noise and trade uncertainty?
Well, the way that the president breaks stories, you can't drown them out. I mean, because he can come out right now and say, he has decided that Australia, one of their greatest allies ever, Australia's they have to pay. And you're saying, well, pay for what? So yeah, he can change the discourse, but I think that what this is the individual investor is a little too exuberant here, but the individual investor is saying, I'm going to use it phrase. This is what the president should be. That we're number one. We're number one. And it doesn't matter about the tariffs. We're number one.
But do we believe retail has an edge on institutional money? Or is it just hope?
Retail recognizes that the Dow was at 1,000 in 1982, and now it's at 45,000. And if they had just stayed in and stayed long, if they had owned NVIDIA and not traded it, then they would be very rich. And that's it. Look, NVIDIA made people rich like no stock I've ever seen. It's a retail stock. The institutions got out of NVIDIA years ago.
I know, but couldn't we have had that same kind of conversation about JDS Uniphase or name it?
You mean just don't sell us?
Yes.
It then became just don't sue us?
Yes.
Look, here's the difference. Sell some NVIDIA. You never got to sell any JDS. You can sell some NVIDIA and go buy, buy whatever. You go to Amazon. Here, this idea. Sell some NVIDIA, a fraction, just to get your position down to 5%. We've done this at the club. And then go to Jassy. Notice I don't call it Amazon anymore.
NVIDIA, as we said, the first company to hit a $4 trillion valuation. Mike, we were talking with Cramer about the last big milestone at $3 trillion a couple years ago. Mm-hmm. It's pretty remarkable. And what's more remarkable to me isn't actually how the market is capitalizing this company. It's what underlies it, which means the free cash flow and the actual size of the business. Because this is not one of those things where the market is kind of looking deep into the future and saying this is going to be, a massive deal. The rest of the industry is handing its free cash flow to NVIDIA. NVIDIA has a higher free cash flow yield than Microsoft, than Amazon, than the other competitors that used to actually be the cash cows because they're giving it all to NVIDIA. Now, earnings estimates for the current year haven't really changed since Thanksgiving for NVIDIA, but people got more certainty about next year, right? So I think that's an interesting story. NVIDIA, by the way, only spends like $4 to $5 billion in capex a year. It's amazing. So that's why the market has decided, based purely on the numbers, not on hopes and dreams, that it's worth this number. Now, we never know what the actual real market cap is in real time. You don't really know the share count in real time. They have a buyback, a $50 billion buyback. They could be buying some in. Doesn't matter. It shows you in broad strokes why we got here. And I think that the reaffirmation of confidence in the AI trade has been probably the biggest single factor, besides the realization that, at least it seems, the administration does not wish to undercut the economy with tariff policy.
And your point about NVIDIA being a taker of capex that others are spending as opposed to spending its own is a good one. And it begs the question about this flywheel effect that we've seen over the past few years with big tech. Those who are spending more on capex, how much they're getting rewarded in the market for that AI spending. Yes. You look at Google, for example, and Apple, for example, there's been more dispersion, it seems like. Right.
So the market's making an assessment of whether that spending is defensive, whether it's going to be productive, and whether it's going to be, essentially squandered. And, I mentioned the free cash flow yields. Alphabet's got the highest, right? It still looks pretty cheap because there's not a lot of confidence of the durability of that free cash flow from the search business. So, look, the stuff's not cheap on any measure, but it does show you that, the AI bull market has been the thing that bailed us out of macro uncertainty multiple times over the last almost 3 years.
Yeah. NVIDIA's road to a $4 trillion market cap was boosted by a major rebound in the past 3 months, shares jumping more than 40% since April. But what could fuel the chip maker's next leg higher? Christina Partsinevelos digs into that for today's Tech Check. Hey, Christina.
Hi, Leslie. Well, like you said, NVIDIA's newly achieved, albeit briefly, $4 trillion market cap today is really a valuation fueled by more than just chip sales. Investors are really buying into the transformation for NVIDIA into an AI infrastructure powerhouse. CEO Jensen Huang has repeatedly stressed that NVIDIA is no longer, quote, just a GPU company, calling that era the good old days at NVIDIA's GTC conference just this past March. He now describes NVIDIA as an AI algorithm firm, and with chip design almost secondary. The stock, like you mentioned, 40% surge since May, April, and that has been aided not only by the shift into an AI infrastructure, but also the thaw in U.S.-China trade tensions, as well as multi-billion-dollar chip deals in the Middle East. But the long-term thesis really centers on NVIDIA's full-stack strategy. In networking, Bank of America says NVIDIA's NVLink is at least 1 to 2 generations ahead of its competitors, allowing chips to communicate faster with each other. Its InfiniBand technology could be even more significant, enabling ultra-high-speed communication across servers and data centers, which is really critical for large-scale AI workloads. In cloud computing, NVIDIA's new DGX Cloud Lepton gives it direct access to developers through partners like CoreWeave and Lambda, circumventing traditional cloud providers like AWS. AWS, by the way, and many cloud providers are now trying to build their own chips to reduce dependence on NVIDIA. And in autonomous vehicles, Bank of America says the industry is having its, quote, ChatGPT moment, pointing to the massive data needs. A single test vehicle can generate enough data in 6 hours to fill 256 iPhones. They estimate the GPU count for an autonomous driving assisted system could jump from 8,000 GPUs to 80,000 GPUs just in the next few years. Right now, auto only contributes 1% of NVIDIA's total fiscal 2025 sales, which means there's a lot of room for growth. NVIDIA's growing presence, though, across networking, cloud, and autonomous technology really offers a glimpse into why Wall Street is valuing this company far beyond a traditional chip maker.
This is a big story, and I know a lot of people, middle of the summer, NVIDIA hits $4 trillion. This literally underscores and highlights the biggest argument right now in the financial services industry. What's the bigger risk? concentrating or diversifying? NVIDIA hits $4 trillion. There are 5 companies right now with a market cap greater than $2 trillion. Then you have 8 companies with a market cap greater than $1 trillion. But how about this? Palantir is the 24th largest company in the United States. It has a market cap of $330 billion. To get in the top 25, all you need is $300 billion. That's Coca-Cola. So it underscores how over the last several years we have had this dramatic concentrated performance from these AI leaders. Look, the AI leaders right now, and they're all above $1 trillion. It's NVIDIA, it is Microsoft, and guess what? It's also Broadcom. Those are the top 3. But you have to ask yourself as a portfolio manager if, in fact, you can actually concentrate. We all talk about, well, we have a portfolio on the show. The Joe T has 125 stocks. Joe T isn't going to have 8 stocks or 10 stocks. And that's why the last several years, the overwhelming majority of portfolio managers are underperforming their benchmarks because the performance is so narrow. And that really brings the question, where's the risk? Do you just diversify and underperform? Or do you actually concentrate, participate, and then at some point, the other shoe drops?
Let's bring in Bryn, who's with us to talk about NVIDIA hitting $4 trillion. Certainly one of the more high-profile members of the committee to be in this name for a very long time. What does this move mean to you? What does this milestone mean, Bryn?
I think the milestone is where it's incredible is, NVIDIA's numbers won't come out until the end of August. But you have a $4 trillion company that's going to grow revenues this quarter at 51% and earnings at 46%. So I think they're on a different calendar year. In fiscal year in 2026, this company probably does $5.50 of earnings. It's just incredible to have a company this size still growing revenues and earnings so quickly. And I think we have to remember, though, it's almost been exactly a year where NVIDIA has been basically sideways between 140 and 100. So you had to be patient over the last year. I've been selling calls, but now that you've had this base that it's broken out of, and I think that really, to me, what's catalyzed a lot of things is when Mark Zuckerberg has come out and is poaching these engineers for $100 million signing bonuses. And so if you think that AI is getting long in the tooth, look again. I think it's just like going in from 3rd to 4th gear from these hyperscalers spending, which we'll all hear about in the next couple weeks. So I think it's really interesting and exciting, not interesting, but exciting about NVIDIA that it's finally broken out of that 1-year base. And so you could easily see this name creep up into the 200s because of this strong earnings and revenue growth. So I think we're in this moment of time, and NVIDIA, as Joe, we talked about the other day, NVIDIA, I think, will continue to be a strong performer towards the end of the year.
I think absolutely. I agree. Technically, you're seeing a breakout, and this is where the spending is.
I thought Melius Research had an interesting note. And Bryn, I'll get your take on this too, because they look at the landscape, and I think partly to Joe's point, they're in agreement where they're like, okay, you want to continue to buy AI semis, but they say to exercise caution on SaaS names. They want you to continue to buy the NVIDIAs. They want you to buy AMD. And they want you to buy Joe's Broadcom, but they don't really want you to buy Salesforce, nor do they want you to buy Workday or Adobe. They see where the puck maybe is going, and they want you to go there. Do you agree with that call?
I think that, well, we'll see. I mean, Salesforce is expensive. Obviously, Mark Benioff, they're spending a ton of money with their agentics, but I think it's an open field. So I think the report is sound, but I still think it's early days, though. Obviously, Salesforce, ServiceNow, all of those companies do so much more than just agentics or agents, et cetera. But I do think, though, that there will be winners and losers. And as we remember going back to 2012, the early days of the cloud, no one believed in it. No one believed in it at all. But it actually allowed Microsoft to re-rate, Amazon to re-rate. And so I feel like we're in these early days where we're not going to know who the winners and losers are. So I wouldn't take this piece and say Salesforce or ServiceNow, but I would just say it's early days. And so there'll be a lot more winners and losers. But I think NVIDIA, Microsoft, Palantir are clearly going to be the winners in the space over the next couple of years.
But let's get to that top story with NVIDIA, a $4 trillion company pushing the NASDAQ to an all-time high and accounting for 7 7.5% alone of the S&P 500. Dan Ives of Wedbush estimating, look, he says this isn't just about NVIDIA. This is a whole ecosystem that's benefiting from all the spend on NVIDIA. For every dollar, in fact, spent on NVIDIA, he thinks there's an $8 to $10 multiplier across the rest of the tech ecosystem. And my next guest remains bullish on the stock from here. Joining us is Dan Niles, the founder and portfolio manager at Niles Investment Management. Dan, it's been a while. It's good to see you. I half expected you to be shorting this name because I feel like sometimes that's your style, to come in when the consensus is firmly on one side of the boat. Although, tell me what you think of NVIDIA's journey here. This was a company that 2 years ago was only worth $1 trillion for the first time. Last year, $2 trillion, then $3 trillion, and now here we are at 4.
Well, I mean, for me, I never short stocks that are consensus. It's if I think the fundamentals are turning and you potentially have a problem. And that's why, if you think about middle of last year, I said, look, I think we're going to have an issue, AI digestion. And if you remember, Microsoft, Amazon, and Google, the 3 hyperscalers, came out and reported the June quarter of a year ago, and all 3 revenue estimates went down for the September quarter. All those 3 hyperscalers reported in the December quarter, and these are obviously the biggest customers of NVIDIA, and all 3 of those estimates went down for revenues for the March quarter. And the reason is you had an issue where if you're training on all the data on the internet, which is what you were doing by the middle of last year, there's no more data to train on other than the stuff that comes on a daily basis. And so you went through this slowdown in there. And if you look at NVIDIA stock, it went down 49% from intraday high to intraday low. Then you had the big write-off, which ultimately ended up being $4.5 billion.
That was
China
in the first quarter. I just want to make sure, take people back to that. Going into NVIDIA's earnings announcement, there was all of this concern about what potential export controls were going to mean for the business, export controls to China. They came in, they had a big write-down, in some ways even bigger, I think, than people were expecting. But you say it was important that they got the number out and got that behind them.
Yeah, and that's when we turned bullish, because we put out a note in early May, talking about, actually, I think it was late April after that write-down, saying, look, this is great because it de-risks the numbers. The write-down originally started at $5.5 billion. Analysts had to cut the numbers, take China out of the estimates. But also at the same time, so training spending is slowing down, but you finally had inference spending picking up. And so that means people are going to ChatGPT, OpenAI, Gemini, which is the one I use a lot. I probably use it 10 to 20 times a day. And you had inference demand really start to take off. Google talked about the fact that in the month of May, the tokens that they were generating were up 50 times year over year. And then Microsoft, which obviously was invested in OpenAI back in 2019, before any of us had even heard of ChatGPT in 2022, they came out and said, hey, we have a 5x increase in the number of tokens we're generating. And so you put all that together, companies forecast de-risk because of that massive write-down, some of the sovereign AI demand as President Trump went to the Middle East and you had all these deals, all of that stuff. And you have a 40 multiple, which if you look at some of these other Mag 7 names, you go, that's not unreasonable for a company that's growing revenues. Probably for the next several years, they can probably grow it at about 20%.
Right. No, so, and I'm glad, that you brought up a lot of those different deals and opportunity. And that's what I think the question more broadly today and is to talk about, how much space is there for $4 trillion, $5 trillion companies? I think the answer a lot of people would say now is there's room. There's room for NVIDIA to be up there. There's room for Microsoft to be up there. Maybe there's room for Apple to be up there if they can kind of figure this all out. I mean, the sky's the limit.
Well, I mean, so back to your earlier comment, I lived through the internet bubble as well. And you have to remember the other side of this, and this is something I monitor because you want to be careful, right? Like Thankfully, I didn't have to live through that 49% drawdown in NVIDIA earlier this year. You do have costs dropping dramatically underneath all of this. The innovations brought about by DeepSeek, that's really helped token generation go up a lot, which is great.
Which is usage.
Yeah, which is usage. So like I use Gemini probably 10 to 20 times a day now. A year ago, it was probably low single digits because it wasn't quite as useful. Actually,
same for me, by the way, but with ChatGPT, I easily use it 10, 20, sometimes more a day.
exactly. But, the key for us, Kelly, is going to be, when is Apple going to finally produce something useful and get Siri ramped on an AI product where we're on our phones and saying, hey, book me a flight to Hawaii, get me a hotel, get me a car, and you have like a personal assistant on your phone. That's when you're going to see a really big surge. Now, the good news is in the Android ecosystem, you're already seeing a lot of, good products coming out with that integrated in, because obviously Android's produced by Google, and Gemini now, with the founders back at the company spending more time there, is producing really great results. And so you're starting to see that show up in that ecosystem, but that's when you're going to see demand really take off, where inference token generation takes off. But remember, much like the internet, right? There's no question that the internet traffic quadrupled in a couple of years from 2000 to 2002, and NASDAQ went down 78% from peak to trough. Costs dropped a lot. So people always go, oh my God, you're always so bearish. But I'm like, you have to put things in perspective. Short term, you can be very bullish and then be looking out and saying, yeah, but you want to monitor this stuff, because
you're bullish on NVIDIA. You're bullish on Microsoft. Sounds like you're a little bit more cautious on Apple. What color would you add for investors at this point who, this is the kind of maddening but also maybe encouraging thing about markets. Someone said earlier, the book Chip War, it's been, everyone's been passing around the last couple of years. Someone said, if you just read that book and bought NVIDIA at that point a couple of years ago, when it outlines just, how much market leadership they had, you could have done well. If you bought NVIDIA in January, if you bought it, there's so many opportunities to still do well.
NVIDIA, okay? $4 trillion in market cap. Does the chart still look good? Is there a correlation between how you feel about the overall market and how you might feel and how the chart might look around a name like NVIDIA, which is now the biggest in the market?
Yeah, look, I mean, that's just happens to be coincidental today. But, let's look back over the last year for NVIDIA, right? And really this time last year, we were warning clients about the excess enthusiasm that we had seen. We took a lot of heat for it. And just said, look, that just has to take a beat. You're going to find that there'll be excuses, something will happen, and it'll probably get oversold, and the oversold condition is probably viable. But, we want to be very careful of that. And now here we are 12 months later, a lot of that excess enthusiasm has dissipated. It's starting to come back for sure. But I think more broadly, what we saw this time last year, where every semiconductor was doing well, or practically every semiconductor was doing well, now it's a lot more selective. You've got Broadcom, you've got NVIDIA, you've got Credo, you've got KLAC, you've got, a handful of names, and several are being left in the dust. And I think that's the differentiation here. So I look at NVIDIA as not necessarily a proxy or a bellwether for the market, but certainly it's helpful. And we're seeing it across the board. I mean, a lot of people complain about breadth. We just don't have those same problems with breadth here. I think it's, people making excuses, frankly. And from what we see, it certainly seems fine. It's in gear, and it looks like this market wants to trade higher.
Led by NVIDIA, which crossed the $4 trillion market cap level for the first time. First company ever to do it. Christina Partsinevelos joining us now from the NASDAQ. Christina.
Just over 2 years ago, John, NVIDIA wasn't even in the $1 trillion club, but it's been a record-breaking climb, actually, taking 262 days to jump from $1 trillion to $2 trillion, then 3 months to hit $3 trillion, and now just over a year to reach $4 trillion. The stocks surged 42% just in the last 3 months or so, of course boosted by we can call it a thaw in U.S.-China trade tensions. You've got the multi-billion-dollar chip deals in the Middle East, and NVIDIA's decision to write off $5.5 billion worth of exports to China. That de-risking play specifically for China was seen as a strategic move, though there are rumors still swirling about a China-compliant chip in the works. Even today, there was a report from the FT which could further lift revenue. NVIDIA told me they're not commenting. But now comes the next big milestone. Wedbush sees a $5 trillion market cap on the horizon. Loop Capital even says $6 trillion. To even get to $5 trillion, NVIDIA shares would need to climb another 25%, even 26% from current levels. That means maintaining not only its dominant 80% share of the AI accelerator market, think of it like AI chips, but it would also have to expand its margins and remain the foundation for enterprise as well as sovereign AI factory buildouts. Governments from Japan to the UAE are pouring billions of dollars into sovereign AI infrastructure. And NVIDIA is positioning itself as the arms dealer for that race. But it also means moving beyond just chips. It's expanding its software stack, AI cloud services could be the next billion-dollar business, potentially locking in developers, enterprises, and nations alike. And as CEO Jensen Huang has said on the earnings call at the GTC flagship event in March, this isn't a GPU company anymore, it's an AI algorithm firm. Guys?
I mean, look at the one that's in the target zone. 12.5% of sales from China. $4.5 billion write-down. And the stock off to the races. I still wouldn't buy it. Here's the problem. Customer concentration. And all of those customers are looking for other ways to develop their own chips. That didn't hurt NVIDIA to go from 90 up to where it is now, but I cannot buy it now. Frothy, Karen said. I think the point, if Karen, I shouldn't say that. You're a value girl, so you have a different opinion of frothy. I just think that what makes NVIDIA a winner in the AI space is going to be chipped away at.
Okay.
When, though?
Yeah,
I mean, that's fair, except for I don't think anybody's even close. And I feel like that's what we've learned over the last few weeks, which is that the valuation is not expensive relative to the growth that we have and even the foreseeable. I understand that we've had these massive quarterly, almost impossibilities in terms of a bar being set higher. But, all we heard out of AMD is the 350 and the 400 chips, which aren't even on, they're not even in the stratosphere. So if anything, you're getting excited about where they sit in terms of data center and some of the broader, platform parts. But I hear you on that. But
gotta finish your.
Well, I was just going to say that the rally in NVIDIA has come with a lot of pessimism around it. That's been reinforced by. Remember, they were last to the party in terms of earnings. We have had and I talk about this sovereign AI tour that they went on with the administration. And I think again, sovereigns are behind the private sector. They've got a lot to do there. So.
Yeah.
So also, this is a stock that went from 152 down to 86 January to April. So this is not one that hasn't had hiccups along the way. So this is not a story that has only been lower left, upper right. I think you're due for another one of those pullbacks.
Okay. I mean, I would even argue that those hiccups are the reason why this rally can go higher. That despite the DeepSeek scare, despite all this, what did we learn from Microsoft recently from that report out of the information? That it is stepping back away from making its own chip, that it may be harder than thought to do that. And also some of these specialized chips can actually coexist with the NVIDIA chips. That it's not necessarily a replacement for them, it's for their specialized needs.
So let me just add so I'm always long, right? And I'm not inclined to sell things in this, but I am inclined to hedge. With the VIX here, I'm inclined to buy some protection, or in a name like NVIDIA, where I do feel like it's getting a little frothy, but I still want to be there, sell some upside calls, because we talk about it all the time. If demand is still there, then I think that is the single most important underpinning of the story. And I think demand absolutely is still there. It's going to peak. The stock is going to peak well before demand is, but I don't know when that is.
Yeah.
All right, I hope you're all doing great today. NVIDIA finished the day 1.8% higher after surpassing $4 trillion in market cap earlier in today's trading session. It's a big milestone, and I seriously think we will see multiple trillions more added to NVIDIA's market cap over the next 5 years, which is crazy to think after the massive run NVIDIA's already had. But I genuinely think this company still has a lot of runway ahead of it. Really quick, I want to cover a couple pieces of NVIDIA news that we got today. First, the Financial Times is reporting that Jensen Huang will travel to China soon to meet with leaders, and that there is a new NVIDIA chip for the Chinese market that is designed to be compliant with U.S. export controls. According to the FT, that chip is set to launch this September. Now, I have no idea if this story is correct or not. I'm just bringing it to your attention so that you're aware of it. Interestingly, Bloomberg reported yesterday that China intends to build dozens of new data centers, including data centers that consist of high-end NVIDIA GPUs that are currently restricted under U.S. export controls. I just wonder if perhaps there is some overlap in these two stories, and perhaps some of the data center build-out reported by Bloomberg could be Chinese companies preparing for a new chip from NVIDIA that is compliant with export controls. I don't know if that's what's happening here or not, but the timing is interesting. As a reminder, NVIDIA guided Q2 revenue at $45 billion, but they would have guided for an additional $8 billion in revenue if there were no export control on H20 sales to China. And so, if we get news of either export controls being lifted or confirmation of a new NVIDIA chip for China, then I would expect NVIDIA stock to trade meaningfully higher on the news, as that would bring billions of dollars in revenue back in a play that analysts are not including in their current estimates. I do want to mention an important word of caution, though, because I think it's important to have an objective view of things. If NVIDIA were to announce a new chip for the Chinese market, I would expect the current administration to be much more proactive in implementing new export controls compared to previous administrations, given this administration's focus on trade policy and export controls to China. It would be very unfortunate for NVIDIA to announce a new chip for the Chinese market only for the administration to put another export restriction on that new chip shortly after it's announced. I don't know if that will happen or not. I'm just bringing it up because it is a genuine concern that I have. The good news is that regardless of what happens with China sales, NVIDIA is still growing as demand is so strong. And the sovereign AI deals in the Middle East and Europe can offset what NVIDIA is missing out on in China. Jensen told us at GTC Paris that there are currently 20 sovereign AI factories being planned in Europe, along with many other AI factories being planned by European companies. Jensen believes that Europe's computing capacity will 10x in just 2 years. Also today, we learned that CoreWeave has launched the first NVIDIA RTX Pro 6000 Blackwell Server Edition cloud instances for enterprise and startup clients. As a reminder, CoreWeave also announced the deployment of the first NVIDIA GB300 system last week. This is NVIDIA's Blackwell Ultra, and this is a big deal. NVIDIA originally guided for Blackwell Ultra to launch during the fiscal third quarter. Then Jensen told us at GTC Paris that GB300 was completely in production. Then there were some reports that it may launch sometime in August or September. But now here we are with official confirmation of the first GB300 deployment from CoreWeave. Blackwell Ultra appears to be slightly ahead of schedule, and it should ramp very quickly, especially starting in August and September. Blackwell Ultra is essentially an upgrade of the chips within the Blackwell system, and it is not a complete system overhaul like Blackwell was. This means we are substantially less likely to see delays in the rollout of GB300 like what we saw with the GB200 Blackwell systems. And that is very good news. I also want to briefly mention something I said in yesterday's video because I think a lot of people aren't paying much attention to it, and that is the implications of the recently signed spending bill on NVIDIA and semiconductor manufacturing. So the bill that was signed into law last Friday boosts tax credits for semiconductor makers building plants in the U.S. from 25% to 35%. This includes TSMC, which manufactures NVIDIA's chips. This should encourage even more onshoring of production to the U.S., which ultimately benefits NVIDIA. Additionally, under the bill, businesses can deduct 100% of investments in certain machinery and equipment in the same year that the investment is made. This is great for companies like TSMC, and it can also benefit NVIDIA by allowing them to deduct expenses for things like R&D tools and facility improvements. This is also good for NVIDIA's hyperscaler clients, as it is my understanding that they should be able to deduct expenses they incur from purchasing NVIDIA systems and GPUs that they use for research and experimental purposes, such as training new AI models, developer experimentation, and research projects. I don't think the total expensing provision applies to commercial use of NVIDIA's products, but it is my understanding that the provision does apply to investments in NVIDIA products that are used for research and experimental use. That is my understanding of the provision at this moment. If correct, then that is a positive for NVIDIA, and it should help spur even more demand for NVIDIA's products. With this in mind, I think we're going to see AI models from NVIDIA's large hyperscaler clients become drastically better over the coming year if they can now deduct 100% of their investments in NVIDIA systems that are used for research and experimental purposes. I continue to be bullish on the long-term future of NVIDIA. I seriously think the company still has a lot of runway ahead of it. Blackwell has ramped swiftly, and Blackwell Ultra should ramp even faster. After Blackwell has ramped, we should see margins return to the mid 70% range late this fiscal year, as NVIDIA forecasted. We have a clear data center product roadmap that stretches all the way into 2028. In 2026, we should start to see shipments of NVIDIA's next generation Vera Rubin. The Vera CPU will be NVIDIA's first ever custom CPU built to work in lockstep with the GPU. And the Rubin GPU will, of course, provide substantial improvements compared to Blackwell. NVIDIA maintains their competitive moat across the entire stack, both hardware and software. And NVIDIA software offerings in CUDA is a massive advantage for NVIDIA, as it is widely recognized and the go-to choice for many developers. I think that NVLink Fusion actually strengthens NVIDIA's competitive moat, as it increases the likelihood that customers will remain within NVIDIA's ecosystem. NVIDIA is delivering performance upgrades that are so substantial that their customers have no choice but to continue purchasing NVIDIA's latest products in large quantities. NVIDIA is bringing AI to the world's enterprise IT, which Jensen believes is an opportunity worth hundreds of billions of dollars. NVIDIA has massive sovereign AI deals both in the Middle East and Europe, and NVIDIA will play a crucial role in the future of quantum computing. Jensen told us at GTC Paris that NVIDIA is working with just about everyone in the quantum industry on NVIDIA's CUDA-Q platform, and that the next generation supercomputers will have a QPU assigned with QPUs connected to GPUs. Just as NVIDIA used their GPUs to speed up CPUs, they're now going to do the same thing with QPUs. Jensen thinks that the world's computing capex will reach $1 trillion annually by 2030. If he is correct, then NVIDIA should be worth substantially more in the years ahead than it is today. Remember to stay calm in this market. Remember to maintain a long-term perspective, and do not make any hasty or irrational decisions. With all of that being said, I hope you all have a great rest of the day, and I'm curious to hear your thoughts about NVIDIA in the comments below. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.